ready. You are live. All right, breaking my computer real quick. All right, unbroken. So I had to wait a little bit. I thought I was gonna do this a half an hour earlier, but this cool thing happened to my fence. I had somebody. Oh, actually, where's the other one at? So I had somebody smash that. You see this rock here? It used to be like over here, and they pushed it over a few feet. I think the other day, I think it was Thursday or something like that. I was like, sorry, like a pretty good day, except for somebody smashed my fence. This is what happened. So I was waiting for somebody to show up, and they were a little bit late giving me a quote. But somebody stole my neighbor back here. She had a Jeep, smashed it through my fence, hit that rock, like went back, and then where you can't see, kind of like around the corner, smashed another fence behind there, and then this is like the driveway kind of behind my house. And yeah, and took off, and they caught him like 20 miles down the freeway doing 120. So super awesome. So that's why I was a little bit late. What's up, Snow? What's up, Velocity? Yes, thought I'd share why I was late a little bit today. And then I was actually just reading through, wait for some people to trickle in, see if we have anything specific we want to talk about. I only have one thing on my mind, but I was looking through T-Mobile. I've owned T-Mobile for a long time just because it's my carrier, and I was believing owning stocks that you actually use the companies. And if I'm going to pay, I pay $170, including $170 including like my internet and a bunch of phone lines. So if I'm gonna give it to company, might as well give it to one that I own. Did my Tesla come alive and do that? God, that would be like the worst thing ever, right? Yeah, it was the FSD the FSD 9 update that happened last night, the beta, and it smashes fences. I don't know. I mean, I guess mine could do that. That would suck. Could you imagine? Like, it just full self-driving itself, like, right through something? That'd be terrible. I stick my water. So, leap calls and selling calls. Yes. I hope she jumps on here too. One of my friends actually specifically, like, she has this friend, and let's see, Astra Space Inc. And her friend actually like runs this company that IPO'd. So she bought shares. She wanted to make it like a long-term hold. It actually doesn't look too, oh, I have it on a year chart or what? So she saw it coming down. Like, she's only it's only been out for like a week or something like that, and she's like, okay, I want to put in an order to average down. And she's never like bought or sold or puts or options or anything like that. So I was trying to walk her through selling a put on Astra Space. Like, you can sell these at $12.50, and that's where she wanted to put an order in for $12.75. I was like, just put the $12.50 in, collect $100 and something, and then you're good to go. Kind of no matter what happens. I'd kind of like to know more because I have access to this person. Like, just the CEO is just like 1 degree, I guess, away from me, so it'd be pretty interesting. The only space that I have ARCX ETF, and I have Tesla shares, of course, which may turn into warrants for SpaceX at some point, or not SpaceX, Starlink. But other than that, I don't know how much money there is to be made in space. Satellites probably is pretty decent though. Dude, Ghostbusters, what's up? Yeah, nice. I know you like specifically everything we talked about last time. You were late for it, but I think we're all set now. So leaps calls and selling calls. Is there anything special about them? Like selling calls is like that is the easiest, most risk free, and I actually was listening to an interview with Tom Sosnoff. He's the guy that like he made Thinkorswim. I don't know if you've heard of it. Tasty Works, pretty big deal. Been doing it forever, and he like he says these things like totally nonchalantly, just like, yeah, you should do this and do that. But since he's been doing it forever, the guy's really smart. One of the things that he had said, just specifically about selling calls, that was so blatantly obvious, was if you're worried, like shares that you own, so selling calls, you'll need to cover them somehow, and it's typically shares that you own. So, for example, like Tilray that we own, and then we can collect premium on it. So. And he was specifically talking about if you're worried about a company's earnings, he said just go and sell the at the money call, and it makes total sense. You're not selling it like far out of the money and just collecting a little bit, and then the stock runs up, and then you only have that like little bit of premium. Or if it goes down, then you've lost the share value. Plus, you didn't collect much premium. He said just sell the calls at the money, and which makes so much sense because during earnings, like that expected move is built into the option price that you're able to sell it for. So you collect all that premium of the expected move if it goes to the upside, but then you still keep it if it goes to the downside. It was like just super smart. And leaps, I'm not sure what do you want to know about leaps. I definitely buy a few, and I've been eyeing a few. Actually, I did buy, it was a little bit shorter term, but definitely way down in the money, Baba. I've been eyeing like a 2-year out Alibaba, like a 180, 185 call. Yes, I would park money in QILD or SPHD as a high interest savings account for a Cybertruck. Yes. What do I have? I have, I don't know, 300. I think I have 300 shares QILD, something like that. Where is it at? QILD. We have 330 shares. So I do park some money in there. I actually park $22 a day in QILD. I think it's fantastic. Either that, I mean, that's a very good savings account. So it'd be like the S&P or Qs too. If I was to roll out a call credit spread, what time frames would I be looking at? How far out? Can you give me an example? Because it's going to depend on the underlying, like, and what I see upcoming. Do I see that, call credit spread. So it depends, like, what I see kind of in the near term future. If it's something that's been going up over the time, let's say you sold one on the S&P, or something like that generally goes up, but bad news could take it down pretty quickly, I probably wouldn't roll that out very far. I would either take my loss. Oh, Palantir. I would probably do that shorter term. So depends, like, I don't know how far out it is too, like out of the money or in the money that you are on that. But since Palantir seems to move up and down, do I have it up? No, I don't. But on that specifically, since it's absolutely volatile. So I think you're more likely to get a downside over a week or move sideways, um, rather than going super long term. Something, I mean, I guess it's been pretty sideways. So, but since it's been kind of in this range the entire time, am I covered up? Nope, I'm not. I wouldn't want to wait too long, so I wouldn't want to like move it all the way, months and months and months out. Just my personal long term thesis is that Palantir is just going to be up and up and up. Um, so you need to take advantage of that before before it does that. So I would, if it was going against me, and I don't know how far out you opened it. I mean, statistically, you should be opening them up 6 weeks, 4 weeks, somewhere in there out, and then managing them at about 2 to 3 weeks, and then moving them out there. Could we cover assignment with spreads and how Robinhood deals with it? Or do they? Oh, yes, 100%. So this happened to me. This actually happened to me 2 different ways, which sucks. So, I had, I've had two butterflies the last 2 weeks that expired, and Robinhood dealt with them differently. So I had one. Um, Let me see. Cover. Okay. Okay. I'm sorry. I kind of misread that. I was thinking about the assignment. I was thinking about they basically sell out your positions like an hour before market close on Friday, which happened to me, and then they did it in kind of an odd way, but didn't really. They put me at maybe not something that I would prefer to be in, but it wasn't a bad, like they didn't leave me with anything bad. Like they left me with a covered call. They sold everything else off. They closed everything out with 4 options and then just left me covered call, which is, I mean, that's fair. But as far as, let's see, okay, so in assignments, yeah, so assignment, yeah, Robinhood will automatically execute for you because you'll, like, I don't know what specific you're talking about, like, could be diagonal, or maybe you're doing poor man's covered call, or you're doing just a covered call. But in all those positions, Robinhood is taking the stock or that longer covered call position, or that longer call position, and they'll execute it automatically. That's what they're using for your collateral against whatever sold. So every single time I've had it happen, they're automatically executed as one trade. It's only happened, it'll happen like close to close. I've only had one exercised on me. I think it was a McDonald's, and that was when they had that was when they screwed up, like over the weekend. So like over the weekend on a Friday, if you got exercised on, you would show that you had to buy however many tons of shares, and it wouldn't settle out until the following Monday. So I think my account showed, I don't know, I don't even remember what is McDonald's at, and I don't remember how many I had, but it showed it showed my account balance, 200. So, and I don't know how many of them I had. So it showed like a negative, $40 or $50 or $60,000 or something just on the day. Who knows? Maybe I had 10 of them, and it showed like negative 200,000 or something on my account. Oh yeah, but put credits and poor man's covered call. Yeah, it'll automatically execute the farther out one. So if you don't want to give up your leaps, basically, then you would have to buy it back just before it's closed. But if it happens automatically, they should execute your long position. No, you get this question all the time, but can you explain resistance and support when a stock is in a bullish run? I don't do a lot of technical analysis at all, except for, I mean, like, I obviously pay attention to Tesla quite a bit, but most of it really comes down to, even though you can use tons of indicators, lines, like you can use, you can see on this, like you can use MACD, you can see if something's oversold, overbought, you can see the volatility, but a lot of it just comes down to really pattern recognition, and then you have to take into account, depending on the underlying, what news is at the time. And since this is all what I pay attention to, I mean, I do pay attention to other things, but I like super focus on Tesla. I really start to see over the long term all the patterns of like what happens at earnings, what happens at production. Like we're down after production delivery, which has traditionally been exactly what's happened like every single time the last 4 times. You can see areas. Let's get a little about. Let's grab a 20-day here, but there's things like I hate what I did with this chart. There's things that you're just going to be able to look at, and like you can see this right here, this line. I mean, this is pretty clear, right? This is a pretty clear resistance level, right at this 700-ish level, just because it's hitting it, which means there's a whole lot of people who own the stock, and as soon as it sells, or as soon as it hits $700, they think that's too expensive, and they dump it. So that's why they basically hit a wall. They're like have thousands, millions of shares, and they'll have an order in constantly. Okay, so hit 700, hit 700, and nice round numbers are always good. People like round numbers. It's not like I know people use like Fibonacci's and things, but just mentally, like even shopping and stuff, there's $1, $5, $10. You'll usually find them at some sort of even number. That's why when you look at the level 2s, we can't see them right now because market's closed, but when you look at level 2s, you'll always see huge jumps in the order book at those levels. And this is why I know the 700 level, like we're gonna have to keep testing it, and it's going to have to punch through, because it's got to basically satisfy every single person out there that owns Tesla and wants to sell it. We can make this bigger. Whoops. Hey, that's not what I wanted. Let's go back to my chart. Wanted this guy. So every single person who wants to sell it at 700 and thinks above 700 is insane, they need to be able to get rid of their shares, and then that's what gets rid of resistance. And then a lot of times what you'll see is that old resistance becomes the new support, and just because it's a big round even number a lot of times. Calendar spreads. So calendar spreads, I love looking at. Calendar spreads are super cool. I like to look at option strat, and let's go. I don't know if you guys have used this website, but I think this is super good for just visualizing what happens. Where's our calendar spreads? And it's really nice. They actually will have under each of the options strategies, they'll tell you exactly, like you're somewhat neutral. So calendars, you don't want a whole lot of movement, and we'll look at it. It's pretty straightforward when we actually take a look at it. Let's see. Let's get this guy going. So this is something you're going to use it when you think a stock is not going to move very much. So you can use a calendar with calls. You can use them with puts. If you do them with puts, you're slightly to the bearish side. Calls, you're slightly to the bull side. But you can see this huge area of profit. So so we can move, several percentage points, right? So using this example, we bought the September, sold the August, and what we're looking for is the August is going to decay faster in value than the September is, and we get to collect the difference upon the expiration of the first one, and that's when we look to close it out. So you can see if it stays exactly just right in that mid price. So this is a 661. So you can see this is a max gain of $2,500 for a $2,000 cost. So really good gains, right? Over 100% gains on this. And look at how this thing functions. This kind of similar profile to a butterfly, but you have much better profitability earlier. So of course, like very initially when something moves, you're not going to see a lot of movement, but when you're halfway through a calendar, you're pretty wide here. So stocks at 660, it could be all the way up to 740s, all the way down to about 600. So you can see you're a little bit more to the bullish side, and it kind of narrows down a little bit, but not much. So it gives you a really wide area of profitability. So it's something that you don't want to use in a high volatility market, and the underlying, you're going to want to look for it trading sideways. And you can also look at it, I don't know how you visualize it. When I started doing this, I always had a tough time. I could look at these charts, and actually this graph was much more helpful for me. Looking at the graph really cemented everything for me, looking at the different strategies. This was absolutely confusing for me, and I normally feel like I can pick things up pretty quickly, but this, when I looked at it, I don't know why, just nothing really clicked with me. But that graph, or the table view, really did. But the graph is really nice on option strat because you can drag it through time, right? So you can see when you open it, what happens is your profitability lines get wider. So you can see these lines going out and out and out. So we can be farther away from that strike price, the mid strike price here, and be profitable. So you're halfway through this. And those strikes get pretty wide, which means the stock can move pretty decent amount. If it moves a ton, you're going to be outside of profitability zone. And then towards the end, not quite as bad as a butterfly or anything, but you can start to see that these start to move in a little bit. So that's only the last few days it moves in a little bit, but you can also see if you are still sitting right around this midpoint, which is why you want something that's not too volatile. Your max profit is very good on calendars. They're very simple. They're very easy and simple to set up. I think they're pretty easy to understand. They are, depending on your account size, they could be a little bit expensive, and it depends on the underlying you're playing too. So that's $2,000 that you have out on this. What's new in self-driving beta? The visualization. I actually watched some videos this morning. Like they released it last night or this morning, like 4 or 5 a.m. or something like that, 6 a.m. I've watched a few videos with people driving it. So it's just getting closer and closer to that beta, to where we're all going to get it. But it's just drives better. We got rid of radar, so radar is not being used for any of the driving anymore. It's all just vision now, just because that's the way they moved. The new cars actually are not even going to use radar like whatsoever, because the theory is, hey, we have 2 eyes, we can drive pretty well. The car has like 8 eyes, it should be able to drive even better. It's just putting that data into something that the computer can understand and navigate. So it went to full vision, and just watching it drive, it's just doing better and better. Like, it's a huge leap. It's driving from your house and getting you to the parking lot wherever you're going. It was able to navigate. I saw it was able to do like roundabouts perfectly. Like the very first one, the very first betas, like it had trouble, doing left-hand turns and all these like little odd things. So it's just more learning, and learning kind of comes together with all of them, and it just gets exponentially better. Like, even though mine gets just minor bug fixes, from the time I got my car, now I've had it for year, just a little bit over a year. The amount of differences, like every month or every 2 months, is just huge, like huge differences. So and that's going to be the big jump. I was thinking, I had those call credit spreads on Tesla at 700. I don't know how much news it's going to get, or how people actually take the full self-driving, that big step in it. And I'm hoping that's not the catalyst to the upside for next week. What's the best stock to sell weekly? Cash secured puts on for income. One that you want to own. It's so hard. That's such a hard. Did we talk about this last week? But it's a super hard one to answer. Something that you want to own, something that you have enough collateral for, something that you don't mind. It just has to be something you don't mind owning at all. So like, once you get a sign, you don't really care. I've done it on Tilray, which was something that I don't really want to own, but I don't mind owning. And then if I get assigned later, I don't care if the shares get called away from me. But really, probably an ETF, that S&P, the Qs or something like that would probably be pretty decent one. And then you know what their overall uptrend is, so you're good. Okay. But if there was one best one, we would all just say, hey, just do it on this one, and it would be the best. The SPY is pretty good, though, or SPX. Getting into credit spreads, and I'm liking the return potential. Yeah, they're super nice. They're super nice. This is actually not even the correct. This is not the correct environment for it. It's like, I guess statistically, they're better off in a very low volatility environment. So like this last week, which has moved a lot, is not ideal. Do you do any 0 DTE SPX trades? I don't. Nope. I've like watched people do it, and I guess I've done some one. I'll typically do like one DTE, but and understand it well enough to do it. It's just something I don't have my time available during that, because they do need to be managed actively during that last day. And if you don't, then you could get sideways real quick. I mean, I could put one on and then just set a stop loss, I suppose. But I would do them if I literally just sat in front of my computer and traded all day, or just had access to it all day. Then I could do them on Wednesdays or Fridays, I suppose, or Mondays. I guess it's Monday, Wednesday, Friday that they closed. So yeah, that's the main reason. But they're cool. I love that there's so many different strategies out there, and there's something that like there's something for everybody out there for sure. And those are definitely really good income. Those could be something that you can do over and over again. I mean, the closest thing I have to my over and over and over again is just the SPY put credit spreads I put on as soon as I see the dip, which I think be all pretty good now. So what's the last one I did? I did that August. Was this our last dip? 8-9, yeah, because I put them on exactly a month out. So 7-9 when I opened this for a $62 credit, And then, yeah, that's already a pretty good gainer. Already up 43% on that. What's the biggest spread I've done? As far as I've had some, I don't know if you even want to. It depends like how you count them. I've done some debit spreads that are pretty large but very long term, like a year out, and so five. Let's see, that one was 620. I just bought a spread. I don't know if you're talking about dollar amount or the actual like strike widths, but I just bought a BABA a debit spread for August, expires August 20th, and that was 2,000. I want to say it was like 2,800 just for one. But my long strike is, I believe, 180. I actually posted it in the Discord when I did it. I wish I would have grabbed it 2 days ago. $2,865 for one debit spread. But one leg is, 100 or 200 and, or no, sorry, 220 some dollars in the money. So, but that's why I did that. I think Baba sold off a little bit at the end of the day, but this is one I wanted to also buy. I have a Leaps in my other account that I've been eyeing for forever. I was looking at it, what day? I can't remember. I used to be able to find it. I think it was like, it must have been when we were down here at 206. May, yeah, because that was May. That was before, yeah, it was like a couple weeks before I drove to go meet up with Logan. So yeah, I was like looking at it this day, like May 12th or 13th, and I wanted to buy a Leaps on it, giving me 2 years, and I think it was 5,600, somewhere in there. And then the very next day I didn't buy it, and then it had gone up. So I've been eyeing one on Alibaba ever since, and I've been waiting for it to drop down to the $200 level. Obviously we had a nice dip down here, which, oh boy, if I would have picked one up 2 days ago, it would have been beautiful, and I would have already been up like $600-700 on that on the debit spread that I picked up. Thoughts on Newegg and Clove? I can't touch it. I like Newegg. I should have picked it up and wish I would have had. Clover, I did play that actually. So, and all I did is I bought the shares. I had sold the covered calls on them. And then as it went up, let's see. So I sold the covered call, and then as it would move, I would turn that into a free debit spread and then resell it, and then that's what I did like three times. So I ended up with three free debit spreads, and then just sold the shares after I was done essentially using them to open my positions as the covered calls, and that was it. I'm scared of the meme stocks, honestly. I think if I knew less, I think I would be more into them, or maybe if I hadn't gone through the whole first round with the crypto where everything went pretty sideways for a lot of people, then maybe I'd be super more into them. But I assume that's just Newegg is going to be a crazy squeeze. I just put those in the same basket with AMC and GameStop. If you played them and did well, awesome. That's fantastic. I didn't even. Let's see. What is Newegg doing? What did it do? I don't even know how it ended up. Good God. It's just insane. What it does to me, it makes me want to go buy 100 shares or 200 shares, or go buy random out of the money calls, like long dated, because they're gonna be cheap. You're gonna spend $100. Like if you would have bought a call on this just June, 2 weeks ago, it would have been cheap. And I feel like you should go to almost like every one of these companies that are being talked about, or anything that has kind of any. I feel like Newegg almost has some nostalgia at this point because they've been around for a while and people have built their computers. I know I've bought stacks and stacks and stacks of graphics cards and from Newegg alone. I probably purchased almost every single part and piece to every computer. I've built my own computers for 10, 20 years or something like that, and I probably bought every part and piece from them, so they're almost nostalgic. And just buy some like crazy out of the money calls every once in a while, and oh my god, when one hits, because I'll bet the calls on Newegg were nothing. I'll bet this was somebody turned literally $5 into 5,000 or 50,000. Somebody did it. Somebody like 100%. And Clover Healthcare, like same kind of thing. I'd never heard of them before, but I did own the shares for a day. I think is all I did. Nice. I've been watching your channel for about a month now. Really love your channel. Thank you so much. Thanks, Jake. I actually didn't know about the 4 option condors with our channel. That's cool. I'm super happy that, yeah, it's always funny because all this stuff, it becomes like, I feel like it's common knowledge at some point, and I don't like, oh, do I need to put that out there or make a video on it or explain it really well? And that all just stemmed from, I think somebody just asked it in chat. Oh no, I was just going over like one of my plays, right? I was like, hey, I opened up these calls because I already had the collateral on the put side, and after a while that just makes logical sense to me. But yeah, super happy because, yeah, I might as well pick up a few more bucks, right, to the top side if you're gonna open it. The thing is, every day there is a new egg. What? Oh, you mean like as far as the stock that's going up? Yeah, I mean, yeah, you almost have to just be on Wall Street Bets or something like that, because it's got to stem from a group of people. And I think that there's been the other ones, like, what was it? Was it Naked Brand? Whatever happened with that? I remember that got pumped in the beginning, but it was, oh, now it's back to 58 cents. I actually played that. How long ago was that? They tried to. I think I sold it. I want to say I sold it at $1 or 80 cents or something like that. It's been. Wait, what? What? Naked Brand was 400? No. Okay, yeah, this was it. This was it was trading around 60 cents. I did get into this one. So I think I either bought it at $1 or sold it at $1. I can't remember. This is one of the other ones, but now it's trading back at whatever, 50 cents. I can't believe that's, like, unbelievable to me. Did they have reverse splits or something like that? High of 700, and now they have a low of 6 cents. They're like 50 cents now. That's insane. That blows my mind. That absolutely blows my mind. And then it's like whoever's left holding the bag. It's all those things scare the crap out of me too, because it's hot potato, and whoever's not holding it, and if not the whole collective decides to keep holding and it going up, then you're just kind of out of luck. Kind of like with the Dogecoin or whatever Titan coin, whatever Mark Cuban's was, like the exact same thing, because the intrinsic value, that company like Newegg or AMC is not worth it, like just not worth the money. That company isn't, and the only reason that value is there is because people are buying it. And so it is the exact same thing as a Dogecoin, as a sushi coin, as a whatever Shiba Inu, just whatever crap coin, which is the same as our dollar too, our actual paper money. The only reason it has any value because you agreed to give me $20 worth of service when I hand you this piece of paper, but the actual value of some ink on some paper is absolutely nothing. It's just a way for us to keep track of our, we put labor in, we get some money out, and then exchange it. It's just everybody has that agreement. That's it. So that's why they all scare me, though, because I just know there's no hope. There's nothing propping it up long term, as opposed to a company that I believe in, that I see 10 years down the road, 20 years down the road, like what they're doing, even 5 years down the road, what they're doing. And even if it drops 50% today, I still have that outlook where Dogecoin, like, great. What's it going to do 50 years from now? Thing is, every day, yeah, that is the new egg. The new egg. But if you, I wonder, God, like, oh, they don't even have it. You can only buy. But if you looked at, and you went and found like every single one of those and just bought some silly, what's trading for $1? Like something, let's see, $100. Do I own some of the 100 most popular? Okay, when this doesn't populate. So, what's something cheap? Oh, Naked Brand. It is one of the most popular. But if you go to like any of these that actually trade enough to have options on them, hey, nice. I own a lot of that company. Senseonics. I don't even know how to say it, but a friend of mine who's a doctor, this one, SENS, told me they're doing some pretty amazing stuff, and basically sold me on it. I don't know. I mean, I guess that's why some of these are some of the pump and nubs, because they are cheap. But if you found one that was kind of nostalgic and super cheap and shorted just to go buy some super crazy out of the money call. Let's see. So this is trading for $10, kind of like AMC was, right? And then you just grab something they don't even have. Like, what are these? Like, grab it, like GoPro, like January 21st, 2022, gives you like a half a year, and you can grab it for like $16. Somebody at some point grabbed a $16 call on, what was the one that just happened on Newegg. They paid $16 for it, and now it's worth thousands. Like, they turned $16 into a ton of money. I don't even know what's the premium on that. Let's look at that. This will be interesting. So we look at their, they don't even have, where's January? Oh well, we'll just look at it in November. So they turned their $16, $20 into $2,300. Don't think my comments are getting through. They are. Well, I saw the Newegg one, and thoughts on Carve and SGOC. These are all just like, I don't. I I think Carve was a pump too. Um, I was watching it pre-market on those guys in Canada that trade live. There wasn't any news, right? Yep, short squeeze. They're just short squeezes. So like them as a company, I don't have any thoughts on them. It's just a short squeeze. Like people are recognizing the fact that there's short interest in them, and they, I don't know if you know how a short squeeze works. They're basically they force these people who are short the stock to make the stock go up, and they lose tons of money, and that's why they're able to do this. They have to. And then as soon as somebody buys a call, any of the market makers who are forced to be neutral with everything in order for them the shares to be able to balance. So when they buy shares, that makes the stock goes up. It has nothing to do with the actual company. These are all like planned for fun. I hope you make $1 million. Same thing. Look, a $10 stock. There's no, dang it, there's no options on them, so you have to straight up buy them. But have fun with them. There's not going to be any fundamentals or the company to actually talk through at all when it's a short squeeze. That's what's happening. Like I borrowed something. In case you don't get it, I borrowed a share from you. So here, I'll take your share at whatever it was, $10. And because I think it's going to go down, I sell this borrowed share to somebody else. And because my thought is I'm going to, like, once I've already now sold it essentially to somebody else, I still owe you yours. I still owe you your share back that I bought at $10. And now when the stock price goes up and up and up, and you say, hey, my $10 Carver share is pretty expensive now. I want it back. Either that or I want some interest payments or something. Like, you borrowed it from me. You owe me. So now the only option I have is now I have to, and I've already sold your share to somebody else, right? I don't have it. I have to go to the market now and purchase it. And then if it's today, I have to go buy from the market because it's the only option. That one share of Carver, or however many hundred I borrowed from you, at $28 just to give it back to you. And then in turn, okay, so you got your share back. So you're all settled. I already sold it. So then in turn, with that, I just pump the stock up more because whatever shares that I borrowed that I have to replace, I just had to go buy them from the market. And buying shares always makes the stock price go up. That's why you see these. That's why you see these happen the way you do. You don't see them. It's not usually like a real slow. You'll see all these rockets up. Like, it just takes boom a day. Then you'll see some profit taking, and then you'll see the process repeat until everybody's done, and the short interest goes down. And people will look at the short interest, meaning there's not a whole lot of borrowed shares, so there's nobody to force to go buy them at a higher price. Because if I'm the guy that borrowed them, I'm forced to pump up the stock by buying them to give you back your share. And when all those guys are gone, then it can settle down and go back down. So that's what's happening on all these. And if you can front run them and get ahead of them, then fantastic. If you don't, I don't think there's necessarily a reason to play them. Like, not in my mind. That's not what I'm doing. So, how am I positioning yourself for possible market pullback or dip? I always have my long-term stuff. So, nothing special that I'm doing on it. It's always 100% possible. And then even when we do have a dip, it's only a certain amount of time that we stay in the dip. I always, look. And this is the other thing too. We can definitely always look at the SPY and see our pandemic dip, which I don't know that we're ever gonna have a. I mean, that's a pretty nutty dip, and then a few months later we're recovered. Here's an interesting thing. I was can't remember if I was reading it or listening to it, maybe on some podcast. But the reason a lot of people think that this dip happened so fast and then it recovered so fast is just because the way news travels so quickly compared to the years in the past. So if you compare it to, I don't know, whatever, .com bubble or anything like that, like any of the other previous crashes, just for us to be able to get the information and digest it and then either be okay with it or react with it, that all took time. I mean, even for you to be able to buy or sell your stock in the past, we didn't pop onto Robinhood and own 100 shares in, like literally 10 seconds. I mean, I can go from money in my hand and I can stick it in an ATM, or I can photocopy a check. My bank gives me instant credit. I can transfer that. I have instant access in Robinhood, and then I can instantly buy the shares. I can do that like literally within 60 seconds. I'd be able to do that from start to finish, because taking a picture, one deposit, entering a couple things and pushing my thumb on my phone and approving it on Robinhood, and then that's instant access, and then I can buy shares. Like, if you think of our reaction process, it is so fast. So we get to digest things so much quicker. And that's a speculation of the reason that we can, these dips and pullbacks, they happen fast, but they also recover fast at the same time. So something that used to take a year, because you would have to either like go into your brokerage. Could you imagine what it took? I mean, even 10 years ago, 20 years ago, for you to take your check, like if you had a paycheck to buy stock, you had to go to your bank, probably wait for it to clear, or write a check to whatever brokerage is out there. What's the one I had back in the day? I don't remember. I don't remember them, but I actually used to have to write them out a check. Check has to clear. Then the funds are in your account, and then they are the ones then you're like, hey, Bob, I need 10 more shares of Microsoft or 100 more shares, and they charge you some huge transaction fee, and then that happens. But now, with everything so quick, I mean, like, stock is traded like nothing, and our news comes like nothing. Like, how many of you guys knew even half of what you know today compared to like 2 years ago? You can jump on Twitter, you can jump on YouTube, you can get all the information you could possibly ever need. It's just, everything happens at light speed. So I think some of that, like, even when we do talk about pullbacks and things, I think whatever that is going to be relatively short term compared to what it was. But obviously I can be wrong. So hope not. We do seem like a little bit high, but everything, I don't know. And then also there is a good bit of information. I know one of the persons that hugely predicted a major crash or pullback was Michael Burry. If you look at his filings, and even with his, he's the guy from The Big Short, and he's even like with that big profitability, him in his lifetime, he's a great, very, very smart guy, very intelligent. He has not beat the S&P 500 on returns, which is insane to think about. I'm interested in comparing the intraday pattern. Think you can make money back on the end of these squeezes? Depends how you play them. You gotta be the guy that's not holding the bag. That's it. Are you saying like they're the same? Are you saying they're the same across the? Let me see. Like they trade the same? Look at that. That's just stupid. That's just funny. Hey, I don't need my drawing tool anymore. I just need my pointer. There we go. All right. Let's look at that, and then we can add add study, compare with, and which one? Let's compare with. Those look like they kind of move differently. That's funny. That the actual. Did I get the right one? Let's just see. That actually is complete divergence from one another. Money was coming out of Newegg into SGOC. That's funny. And that is one intraday chart. I do that layover a lot with different auto manufacturers and Tesla quite a bit in the S&P. That's what I was doing. Realized Tesla just moved when it was down, and was moving exactly like Ford and GM. How much money have I pulled out of your Robinhood portfolio over the past 2 months? I think 9,000 something. 9,000. Because I usually take $2,000 out just that I stick in my long term every month, and then out. Then I think I did take $5,000 out in one tranche too. But once in a while, I just do it randomly. Like when a lot of positions close, or I'll roll a lot out, and I just have a lot of extra cash sitting there, and there's nothing that looks good to me, I'll just pull some out. Or if I need to pay for tabs on a Tesla at $1,000, which is ridiculous, then I'll pull some out too, I guess. Which I didn't. I didn't do it that day. Yeah, and I think as far as your comments getting through, I think I used a little bit different, little different setting today too. That may not come through as quickly, but I was hoping that the stream was a little bit more stable. Stream health is actually looking pretty good, which actually should be cleared up. I think it's going to be next month or so. So when I moved to this house, I went from like actual wired, like fiber optic internet, and now I'm using T-Mobile's, the little, scared to show that, like what if I pull a wire out, but it actually just it's just cellular data, and then it has a Wi-Fi, and then I talked to one of the seems to really slow down in the afternoon when a lot of people are using it. I thought it was 5G, but apparently it's just like 4G LTE, and now I'm getting their actual 5G one, and the 5G speeds, I don't know if you guys all have upgraded to 5G already, but those speeds are absolutely insane. They're like they're pretty awesome. So I'm finally getting that. So I assume 5G upload speeds are good, is just as good as their download speeds. I don't really know though. So hopefully that'll help. But over the past few weeks during this time, like I would get a lot of I'm actually getting it right now, the little thing that says my stream current bitrate is lower than the recommended. Open up the widget, and it just has warning after warning every couple minutes. So hopefully that gets corrected. I was thinking about going to the wired thing, but I really want to use the company that I own, which is T-Mobile, and so I was talking to them first, and that's what they said they could do to maybe correct it. All have retraced over 50% after the big squeeze, only the reset, high of day, later in the day, buy the dip. Oh, like as far as, so you're saying like the movement has been the same, like it follows the same pattern after the squeeze? Yeah, and I mean, it's similar, like all the IPOs did the same pattern for forever too, until they didn't. That was like, it's like strategies work until they don't. Yeah, but why not try it? Just don't go in too huge on them, because now they're all super expensive to play, but why not? So let's see. Let's look at them. You're super into the meme stocks though, I see. Have you had good luck with them? And like, do you play anything else, or are you just kind of getting into it specifically for meme stocks and try to make up some money? What's my thoughts on Palantir? They're awesome. They're my second favorite company in the whole world, and I want to own 1,000 shares of them. I think Palantir is just awesome. I have, let's see. Actually, I was looking. I have them in a few different accounts. Palantir. Let's first go over that because my opinion may be skewed because I bought them. So okay, so we have 417 shares. I buy shares every single day. Where's that? I put $20 in Palantir every single day, up, down, sideways, doesn't matter. I own 3 $20 leaps on them because I want to be able to buy them for $20, kind of no matter what happens. And these still have 11 months on them. But I think Palantir it like blows my mind what they do, and I'm 100% certain that I don't understand them. Like, I don't fully understand their, like, everything that they can do. It took me a solid couple hours of just watching everything that they had available. And they're not, one of the really cool things about Palantir, they're not trying to sell the stock to me. They could give a crap. They're probably not trying to sell it to you. It's not an investor friendly stock. They're selling it to the actual users. So all the stuff is geared towards that. So even to understand what Palantir is or does, I mean, you know, you can say data management, but when all I can look at is the kind of like the consumers and what they are able to do with Palantir's with their softwares, and from that perspective, like, you can see all the different things. then it starts to kind of all come together about what they're able to do. Because at the beginning when somebody's like, yeah, they just kind of take data and put it together and make sense out of it, like, okay, cool, but what does that actually mean? And when you see that they find missing kids within like minutes of some idiot posting like some pornographic material of some kid, and then they can identify like where that phone is, like based on it, like all this stuff, and go save a little kid, like, oh my god, like, it actually kind of gives me like goosebumps, like what they use, like when they're using a lot of their software for good too. That's the other thing I really like about them. They're just like a good company and uses it for very positive things, like finding missing kids, like helping with everything, like just disasters, on top of the military stuff that they do. They're awesome. Palantir is taking over everything. Yes. Yeah, I don't know if you saw it, but they had I don't even know what they call it, but there's a, what is it called? It was like on Twitter, it was like something came up and they're like, hey, basically it was like stock twits, I think is where it came from. And then I hit something, then it was like basically in a whole group call. Is it like Hangouts or something like that? And, like all the people are just discussing Palantir. And the really cool thing was people were trying to come up with their bear cases too, but everybody was like, well, I'm a bull, but here's my bear case scenario, and really talk through it. A lot of people with much better understanding, they're actually in the industries that would use or are consumers of Palantir's services. So that was really neat to see too. That was after I think it had dropped for 2 or 3 straight days, which was super cool. But I love Palantir. I don't know if I'll stop at 1,000 shares, but I just want to continually buy it. I think it's great. I think at some point that'll be the next big one that people missed out on. Like when I missed out buying Tesla for whatever it was, $100, $50, $30, whatever it was, pre-split, long time ago, $40. But if you want, I think you also should understand the companies you're buying, and that one takes some dedication. Like you need to spend a whole day, 2 days, like reading, listening to videos, and watching actually Palantir videos, I think, to fully, or to understand it as much as you're going to be able to understand it. Because even their demo days, that's for like data engineers. That's not for us. But we have to like watch it and kind of scrape through. What is? Do you have preferred days? Let's see. Preferred day or time you sell covered calls. Most of the ones that I have just ongoing, I sell them on Fridays, like every Friday, and then roll them out. And for the following Friday, if they're less liquid, then I'll do them a couple weeks out. How many times, if any, have you lost collateral in your credit spreads? Probably a lot. No, I don't think I've ever just lost them. I've ruled them out. I mean, 100% I've lost them because I've closed them out for a loss before. I don't know, 30, 40. As a percentage, not very often, because I'll roll them out a lot farther than I'll want to, or rather than just taking a loss on it. Since all I do, like those ones we have on SPY, like if I see this dip here and we didn't see this yet, I mean, we knew it came back up. This is where I sold it. But if I'm like, oh no, even if it came down for a couple more days, I just remind myself, I zoom out and go, oh, this is what it looks over the long term. Or 5 years, and this is what it looks over the long term. Yep, we have dips, but this is where it ends up. So even if I have to roll them 3 months, 6 months out to preserve my capital, to preserve my collateral, I'll do that. I mean, this is worst dip in my recent history, so uh-oh, I think I have to go. Here's some craziness going on. Sorry to cut this super short. It's actually, it's probably been about an hour, so I need to go. Girlfriend's home. I like to go see her when she does get home. So sorry. Thank you guys so much for being here. Maybe we'll do another one later or tomorrow if we have some time, or next Friday or next Saturday for sure. All right. Love you guys. Bye.